Hello and welcome to ETBFSI. In the special series of ETBFSI Digital Banking Dialogue today, I have with me Ajay Rajan from Yes Bank and Riddhi Datta from Backbase. Gentlemen, thanks for joining.
Amol, thanks for having us here.
Thank you. Pleasure being here.
So thank you so much. Many thanks. In fact, I'm glad to see both of you here. Ajay, I will begin with you. And the question is specifically about, again, a digital banking. I think it's a very common term nowadays. And after pandemic, it has become so common that everybody is talking about digital. But Ajay, if you could give me your perspective on in last 5 to 6 years, most of the banks, and specifically you being a private bank and the youngest bank, adopted digital very aggressively. Today in 2020, I mean, we are at the end of 2020, when the pandemic is going to get over. Where have we arrived today specifically into the digital adoption? Where are we today in digital banking?
See, if you look at it from a digital banking perspective, and more, I will, speak on the corporate side. Retail, of course, every bank is, focusing on that. But if you look at on the corporate side, the pandemic has actually, if I may say, accelerated the digital strategy, for most of the banks. And if you look at, whether it is, payments or trade finance or supply chain, pretty much every bank is, having a completely revamped, strategy to, to bring in more customer experience, bring in more operational efficiency. So it is, what used to be earlier only a client-facing or a customer digital portion is now actually even a 360 degrees. So banks are looking at digital not only for solving for customer problems, but also for building their own internal infrastructure. So if you look at say Yes Bank, for example, we have completely reinvented our digital strategy, if I may say, and pretty much I think every bank is probably looking at okay, how do I build an institutional strategy or a ethos for digital bank, which is everyone in the bank should have the same vision or the same execution path towards towards creating a digital journey for the bank. It is also about creating a core infrastructure, which is not only the front end, but the bank should also be able to serve the digital volumes or scale from the back end, right? So it's not only important to digitize the front end, it's also important to digitize the back end core, because if you don't have the scale, I think we know what are the repercussions which could happen. The other part of digital, which we see, is that banks are getting more and more open to partnerships, and not everything the bank wants to build themselves. We see that banks, including us, are more open to partnership with fintechs or tech fins. Bring in that agility and bring in that co-creation model to build a digital platform. And also, I think what is important is to to build for scale. So and again, with digital knowing no boundaries, the scale can really be very quick, and that's something which I think every bank really is looking to do, at least at this stage.
Right, Ajay, on the partnership front, obviously I have a specific question. I will come back to you. But Riddhi, obviously we heard about Ajay and his perspective. He specifically mentioned about the partnerships and how the banks are in fact realigning, reimagining after pandemic. How are you looking at the digital banking journey of the banks? I mean, from a tech perspective.
Yeah, I think a few ways to answer this question, Amol. I think the first point is whenever somebody asks me about the digital journey of Indian banks, the first and foremost thing that I normally end up saying is that if you look at the regulator in India, and because I work across banks through the region, not only in India but across Asia, I always say that the regulator in India is probably one of the most pro-innovation regulator that you get to see. So whether it's talking about open APIs, talking about cloud, or all of it, I think, and even the sort of revolution we have seen around payments. I mean, not just restricting it to retail or consumer banking, but even on the small SME and MSME side. So the amount of innovation we have seen from the regulator, I think, has been unmatched. But at the same time, where banks have been found to struggle is not so much on the ideas or on the innovation, but more in terms of the resources. And again, resources is not just about human resources, but also technology resources, in terms of platforms or investments that are required to be made. I'll make a couple of points or statements here. Again, if you go back to a research report which Backbase and IDC published earlier this year, we realized that the average age of core banking, which is your system of records or system of transaction, the average age of core banking systems in some of the top banks in the country and in Asia is around 17 to 18 years. Now we're talking, I mean, in today's day and age where we're talking about making changes on the fly, having core banking systems which are that old, monolithic, it's hardly responsive, right? And it is not up to the date, not up to date with the demands of today's digital era. So that is one point. The second point, and I think as Ajay also started mentioning when he started talking, is that when we keep talking about digitization, at a lot of time, we tend to, for some reason, we tend to start thinking only about the consumers or the end retail customers. The entire spectrum of corporate banking or transaction banking, which is where a lot of, it might not be so volume heavy, but from a profitability perspective, a lot of banks rely entirely on the transaction of corporate banking. That has been ignored when it comes to digitalization. And I was reading up a report that a technology company had come up with in 2019, which said that a corporate client satisfaction has dropped to their lowest recorded level. I think they have been doing the survey for the last 10 years. It had dropped to the lowest recorded level in the service history, with only 49% of broad corporate clients rating their bankers as good or excellent. And the point which was very important for me was that uh, only 8%. I mean, the respondents say that digital features like let's say, can I open a letter of credit online? Can I pay my invoices online? All of these are very important, but only 8% of banks today are providing these services, and that is why. And we're going to talk about it later in the discussion today. You see more and more very, I wouldn't call them as neobanks, but you take the example of a Coconut. Coconut is an SME focused startup which does only invoice financing and payments on invoices. And that is why more and more some of these startups have started coming up, because more traditional banks have not been able to focus on solving some of these simpler problems. So just to summarize, I think from an innovation perspective, from an ideation perspective, Indian banks have taken a huge jump, partly because of the regulator, partly because of their own innovative mindset. But then there are challenges that I just spoke about, and we can discuss about this as we go along.
Uh, right, Rithi, obviously important to discuss the challenges for sure, no doubt about it. Ajay, I will come back to you. And since you mentioned about the realigning or, re-strategizing after the pandemic, uh, how are banks, are doing that? I mean, how are banks actually reinventing the digital banking strategies now, specifically in the new era? Because what we did, we can say that it gone with the wind, So how do you look forward and, realign or reinvent?
So, Amol, as I said earlier, what is first and most important is that the bank, has to have a vision and a goal, right? So, what is it, that they want to achieve? So, do they want to achieve a digital bank within a bank, or do they want to, maybe make themselves position themselves as a neo bank, or do they want to digitize, certain portions, of what they do? Do they want to further, digitize or focus on the customer journey, or or both customer journey as well as internal? So first and most important part is actually to have a end state or a vision and a goal of what is the digital journey that you want to decide for yourself. I think the most important part, is that it should, whatever you decide has to have a 360-degree impact. So it cannot, the digital strategy cannot be built on silos. And unfortunately, I have seen these in certain instances that various silos or functions within the bank end up having their own digital agenda. So retail might have their own agenda, corporate might have their own agenda, the technology team may well have their own agenda, and so on and so forth. So I think it is the right alignment or cutting of the silos is extremely important from an execution of digital strategy. The if I focus on the two big pillars of the execution. One is, of course, the customer part of it, which is, how do you keep the customer at the center of your digital strategy. It could be a retail customer, it could be a corporate customer, but what is important is that your strategy has to be aligned to what the customer wants, right, and not what you want to offer to the customer. Because more and more now, we see that while the retail side, we already saw it, that customers want a more intuitive platform, a more prescriptive platform, like what they experience in a Amazon or a Swiggy or a Flipkart. But what we initially failed to realize, a lot of people, was the same treasurer or the CFO who's used to that kind of experience in a in an e-commerce platform is the same person who is going to your net banking portal, or is talking to your corporate team on the digitization of the corporate piece. So what is equally important for banks is that how do I deliver the same kind of ubiquitous experience, or a seamless frictionless experience on the corporate side as well. So which is where APIs banking kind of came into place, where the bank went and said that okay, we don't even want you to go to our net banking. We simply integrate with your ERP, and we give you instant gratification, or an instant reconciliation, instant information. So everything is instant, right? The same experience that you get on a Google or Amazon is what you get on the banking side as well. The other part, as I highlighted earlier, is the infrastructure part, which is again equally important, that unless you build for scale, you will not be able to build up volumes, and eventually, like Riddhi also mentioned, it will impact your customer experience, and it's eventually you'll end up kind of losing the customers. The other part, which maybe I'll spend a few minutes, is that banks have now more and more started to look beyond banking. And this also, Amol, brings us back to the partnership approach, which I earlier also alluded to. But again, when the client nowadays, talks to the bank, and I'm not saying a retail customer, right? Even a corporate customer, when they talk to us, or MSME, SME customer, when they talk to us, they expect that we should not only solve their banking problems or payments, but we also should help them maybe with a payroll solution, or a tax solution, or an HR solution. So this is where the partnership comes into play, and this is where we kind of tie up with maybe tech fins or neobanks who are very, very specialized in their areas, and they build their solutions with the customer at the center of their technology and solutioning. And what we actually do is have an open source platform where we embed their solutions into our overall proposition, and we go to the client with one bundle solution. So from a client standpoint, he is only dealing with X bank, whereas at the back end, the bank has actually partnered with like-minded or able partners, and is able to go to the client with a single solution. So that is kind of is like a go beyond banking approach, which kind of I alluded to.
I think very meaningful, Ajay. In fact, you raised many points. You spoke about obviously the partnerships and API and infrastructure. Before I ask a question specifically to Riddhi, there is a small anecdote here. We all have seen the episode of HDFC. Okay, that was the third episode, in fact, and RBI has taken a strong action against it. So, considering these backgrounds, and in fact, if you look at the RBI governor statement, he not only specifically spoke about HDFC, but in generally also spoke that and said that the bank should strengthen the IT infrastructure, should invest more. So Riddhi, my question to you is, when banks are going really high in adopting technologies, opening their APIs, and partnering with fintechs and tech fins, what are the gray areas that you see?
Yeah, good anecdote, Amol, and some of the points that Ajay was mentioning was literally music to my ears. It was appearing, Ajay, that you are talking on behalf of a technology solution provider rather than as a banker. So I will actually build on top of what you said, Ajay. And I was noting down some of the points that you were mentioning. I think you first mentioned cutting off silos, and that is the most obvious challenge that we see whenever we go to talk to any traditional incumbent bank, is that they all have a vision of a lot of technology transformation and modernization, but they absolutely cannot get away in their minds of moving away from silos. every business unit, every product line seems to be living in their own organization, and there is very little overlap, or there is very little reusability that you tend to see between one business line and the next business line. So cutting off the silos is a huge challenge. We keep talking about it from day one whenever we start interacting with a bank, and unless and until we move away from that mindset, that will always remain a gray area. I think the second thing that Ajay again mentioned, and which we also keep on talking about, is keeping the customer at the center. Now, whenever, whether it's a retail customer, whether it's a corporate customer, at the end of the day, why do we as customers approach a bank? It's because we are looking for some help, right? We are not looking at any rocket science. We either need help to, save our money, invest our money, grow our money, be more financially, more well off. That is why any customer would like to approach a bank. Now, what tends to happen is that banks, and Ajay, please don't take me wrong, but what I've seen is banks, they tend to get so much lost in terms of their number pressures with the focus on products, that I need to sell this particular loan. I need to sell this particular trade instrument. That becomes more important than thinking about, can I help the customer? End of the day, if a bank starts thinking about just helping a customer, the products will automatically get sold. It's just an offshoot, or just an output. So I think that is the second important thing when you talk about gray areas, is can you start really thinking about keeping customers at the center and design everything around it. The third thing, again, which was music to my ears, was when Ajay started talking about the ecosystem and partnership, right? Because when we again did this survey along with IDC earlier this year, we realized that one of the problems that traditional banks have is having a very legacy view of the ecosystem. That I as a bank want to own everything. I as a bank want to be the best of everything that I do. That is simply not possible, because as a bank, you cannot keep on thinking about hundreds of things. You focus on what you are good at, your traditional products, your loans, your deposit, and you need to collaborate with these fintechs or tech fins where they are doing well. For example, I think as Ajay was mentioning, you for example, you can partner with somebody who is very good at let's say paying of invoices, as payment of invoices as one thing. You can partner with somebody who is very good at, let's say, doing aggregation with for accounts payables and receivables, and pulling that data in. You as a bank don't need to do everything on your own. So I'm just trying to echo what Ajay said, and those are the gray areas. The point about a very siloed mindset and the siloed architecture, the point about keeping the need to keep customers at the center, and the third thing is about having this entire partnership approach. The fourth point, which I also want to highlight here is, and we keep on talking about it all the times, is about personalization and hyper personalization. What we have realized that within India, 60% of banks admit that they struggle to offer content which is intuitive, which is relevant, and which is personalized. I mean, showing any content is okay. Deliver content which is intuitive, relevant, and personalized, and that is something where a lot of banks tend to challenge. So banks should also achieve the agility to to evolve some of their digital propositions,
Okay.
with the ability, as Ajay mentioned, to integrate with third-party functionalities, add more features without spending a lot on your core system transformation. So that would be my short response to your question, Amol.
Very well said, Rithi. In fact, very valid points. Ajay, let me take some more perspective from you specifically on your area, which is about transaction banking. So obviously, digital initiative partnerships are going on. But if I ask you specifically about, for example, on your desk, what kind of partnerships you are seeing or you would like to do in the transaction banking? What kind of scope do you see for digital over there?
So, Amol, if you specifically look at transaction banking now, let me, first, give some perspective of what kind of comes under, what is the scope of transaction banking, right? So the first and foremost is obviously payments, collection payments, which is the remittance, domestic remittance piece. So that bit actually, as Riddhi also mentioned earlier, and in my earlier global role, I have also personally experienced, when I used to go and actually I used to get called by various global regulators, who wanted to understand what is it that India has done on the payment space, right? Because if you look at India, we leapfrogged, I think, global payments at least by a decade, right? So instant payments or IMPS or UPI, whatever you want to call it, is really 10 years ahead of any other global country which you may. So payments is something which I think India has really leapfrogged, and that is something which every bank in India now has institutionalized within their payment proposition. The other very big part of transaction banking is the trade finance piece, which is the cross-border portion. Now, unfortunately, that is a portion which took a lot of time to digitize. So it has been traditionally a very paper-intensive, business. So whether if you talk about LCs or even import-export documents, it has been traditionally very paper-intensive. Now, this is where I give full credit to Reserve Bank of India is when they actually came up with this whole digitized process of IDPMS and EDPMS. Now, which is the whole custom data of import and export, of goods. There was an alignment between the custom data and the RBI data, and they actually put it on a central database, saying, this is now the final proof of whether goods have come into India or gone out of India. Now, what banks like us actually then kind of work on is that how do I use that central repository to digitize my proposition to the client, which actually then brought us to work with our clients and say that we can help digitize the whole import export process for you. The other area where we did a lot of innovation, or where banks actually have also done brought in a huge amount of efficiencies on the remittance business, on the inward and outward remittance business. So that is where API banking, for example, which is our flagship product that we launched, we actually dovetail API banking into the remittance business and help give a instant gratification experience, to the customer. So I'll just give you maybe a 1 minute example. So a very large global remittance player, wanted to offer instant, settlement proposition to their customers. So someone, in the US, going to their counters or online wants to remit something to their beneficiary in India. So they actually, give through the banking channel the money to the exchange house, and the exchange house immediately triggers an API to us, and we, on the basis of the API, plugin, coupled with the IMPS, solution, are actually able to make an instant credit to the beneficiary. So while the person is sitting in front of the exchange house office in US, is able to get an SMS from their Indian beneficiary almost at the same time when they gave the money to them. So that's kind of the kind of efficiencies which on the transaction banking side or on the cross-border side is something which banks have been able to build. However, having said which, the supply chain, for example, is another area where the entire vendor and sub dealer financing portion has been digitized, and efficiencies have been brought in, where not only can banks actually look at the credit profile of the dealer or the vendor, but also through APIs actually enable that instant gratification or instant remittance, to both either the dealer or the vendor. So these are areas where which have already evolved or are in the process of getting evolved. The area where I feel there is huge benefits still to be accrued is on the trade finance side. So that is still a holy grail with FX as well as cross-border remittances, where there is still a lot of efficiency which can be brought in. So even blockchain, for example, to enable a real-time settlement between banks in countries is an option which I think is started but yet to see scale. The FX automation is another area where I think we can build scale. But this area will see a lot of development, and we now see actually a lot of fintechs wanting to focus on the B2B side, because they've obviously a lot of it on the retail side has been saturated. So more and more fintechs and tech firms are also now focusing on the B2B side to see how they can add value, not only on the payments and remittances side, but also on the reconciliation side, which is the other area where a lot of efficiencies can be brought in. So that's kind of in a nutshell what's happening on the transaction banking.
Right, very well said, Ajay. In fact, whenever we spoke about the transaction, the payment, mostly only the retail segment came into the picture. But yes, remittance and the supply chain and e-invoicing are very, very important areas. And I think trade finance is also most of the banks are exploring. But I think good to see that many fintechs are also entering into B2B space and in offering, more what I can say are rational towards payment and transaction banking. Riddhi, while looking at the digital banking story of Indian banks and emerging fintechs, could you just make a small comparison between where are the Indian banks, fintechs, partnership digital today in terms of other banks, maybe from global or Asia? Because you being in a global company, you're dealing with a lot of clients and different BFSI companies. How do you see, or how do you see the difference between the digital adoption there and here?
Yeah, I think first point is that in terms of the maturity of Indian banks when it comes to digital is probably a notch higher than a lot of banks, at least in the region. When I'm talking about Asia and Asia Pacific. So what I was saying is that the maturity of Indian banks when it comes to digital is probably a notch higher than a lot of banks in the region, probably comparable with some large institutions in Australia and some large institutions in Singapore. But otherwise, Indian banks are definitely much higher when it comes to digital maturity. But again, I'll take a segue because as I mentioned earlier, a lot of this innovation, a lot of this digital transformation is happening more on the retail side. And for good or bad, the transaction banking, while it is picking up, it is lagging behind. And when I look at banks in India, and even a lot of banks in Asia, we were trying to analyze why is it that corporate banking has not been able to be at the same curve as retail banking is. And there are 3 or 4 main reasons. One of them is, first of all, corporate banking is primarily built on relationships, right? I mean, which is cultivated over years via in-person meetings. And a lot of processes, even today, remain paper-based, requiring wet signatures. Now, obviously, the last 7 to 8 months has changed the concept of physical relationships to a more digital and virtual, like we are talking virtually, more than what anyone could have imagined. So I think corporates as well as their banking partners have had no choice but to build their relationships remotely, and they've realized that it is possible. You don't need to sort of do everything in person. That is the first thing. The second thing is, as a process, corporate banking services are much more complex, and Ajay would agree to it. Retail banking processes are linear, and the services also are very highly productized. But in a corporate banking arena, in a transaction banking arena, a large corporation may have hundreds of accounts across multiple banks, across multiple currencies, as well as across multiple geographies. So as a process, corporate banking itself is much more complicated and spans multiple products. So as Ajay was saying, trade finance, cash, liquidity management, FX, just to name a few. And the third thing is that when we're talking about all these different product types, the positions and portfolios also require constant monitoring and management. Unlike retail banking, you don't need so much monitoring and management of your position and portfolio. So these are some of the high level, I wouldn't say challenges, but obstacles that we saw why corporate banks or the corporate banking division of a particular bank have not been able to digitize as fast as the retail banking. But at the same time, what we've also realized that if you look at modern technologies, and by modern technologies I'm not talking about AI, machine learning,
Right.
simple digital platforms, which is there to orchestrate your engagement, which is there to orchestrate your experience, is something that banks should start investing in to reach that stage, where one by one they can take up digitization of a lot of their processes. Trade finance, as Ajay kept on mentioning, and I also completely echo that thought, is a place where not a lot of banks have been able to completely digitize them. And one of the reasons behind that is that there's a lot of dependency on the underlying backend systems. So that, for example, if you want to generate a letter of credit online, your backend system should also support that if a request is coming in from the front end, the backend system is also able to service that request. So there is a dependency on multiple factors which needs to be overcome, and a digital engagement platform or a digital banking platform is probably the first step towards overcoming that. The second thing is also, as I mentioned earlier, and I was just thinking aloud when we were talking about customer at the center, and Ajay spoke about FX as one of the product lines. If you are trying to, let's say, redesign your entire FX journey, the question should not be that how, as a bank, the question should not be that how do we introduce digital to FX. Rather, the bank should ask a question that how can we help our customers leverage FX to actually make money? And the moment you try to get an answer to that particular solution, I think digitization will just naturally follow suit. So I think to summarize my answer to your question, Amol, Indian banks are definitely ahead when compared to a lot of other banks in the region, probably in the top 2 or 3 percentile. But then to really reach the top, Indian banks really need to start investing on transaction banking, corporate banking. Probably start with the sector which is often most ignored, which is SME and MSME, which is a lot of institutions but small volumes. Probably start there, but then that is something that Indian banks definitely need to focus on.
Very well summarized. Yeah, Ajay, you want to have a comment?
Yeah, I'm sorry. So I think I also realized that I probably missed one portion of your question, which was on the partnership side on the transaction banking. So if I may maybe just take a couple of minutes on that. So with and I'll try to give you some specific use cases or examples which we see happening. So first and foremost, is actually the whole account visibility or the liquidity management, and this is very, very critical for corporates, especially the larger corporates who have multiple bank accounts. Now, what becomes a challenge is that because flows are coming into various banks, the visibility of liquidity in terms of where is the money coming in, do they have idle money in one bank versus borrowing in another bank, and so on and so forth. So these are some of the challenges which we find corporates having. So this is one classic area where I cannot build a solution because I will not have banks sending their account statements to me as a competition bank. So this is where we tied up, or there is fintech partners who are or tech fin partners actually who actually create a whole liquidity platform where multiple banks are able to channelize their account statements in whichever format that they would desire, and that platform actually aggregates the information from all the banks and is able to give a consolidated dashboard or a view to the corporate. Now this is, again, as I said, is not a platform, while every bank has a liquidity management platform, but I have not practically seen it get implemented because there are challenges around other banks wanting to share their information with peers and so on and so forth. So this is one very classic area of partnership where banks have tied up with the tech fins or fintechs to deliver value to the client. The other area where banks from an internal perspective have used the fintechs or tech fins very well is on the trade side on document digitization. So this is again using OCR where the trade documents actually can be read. LC documents can be checked through ML and AI, and the client actually can be given a very quick response time in a very accurate manner, which again not only helps the bank solve their own operational issues, but also brings a superior customer experience for the client. The third and last, which I may probably just want to stick to, was what I spoke about, the API hub. So what we or some banks are trying to do also is to create a marketplace of sorts. So what we have done actually is, again, specifically for MSMEs or SMEs who want the bank to be the one-stop shop for all their requirements. So we make sure that we are having partnership with tech fins and fintechs at the back end, and we are able to give a curated or a very diagnostic discussion with the client, and in some cases actually even preemptive discussions with the client, and give them a comprehensive solution which meets all the requirements. So only possible through partnership.
In fact, I wanted to ask you about that partnerships only, and you already answered that. So, the time is up, but still I will take one question just to wrap up, before that. And that question is about neobanks. I have seen, as bank is partnering with a lot of fintechs and also now emerging NUEs. How, Ajay, just quickly, if you could tell me, and I will take this question with Ridhya also after you. So how can banks leverage neobanks, to make a real case win-win scenario?
So excellent question, Amol, and very close to my heart personally. And and you will find different approaches from different banks. Some would actually say that neobanks will not exist. Some will say they will eat away the banks. I believe that neither of it is going to happen. So neither are neobanks going to vanish, or neither are neobanks going to make traditional banks vanish. So the end of the day, in my view, the bank who is agile and who is able to partner well with neobanks to have a solution. See, you have to understand neobanks bring in a lot of value, right? They are agile, B, they are very customer centric, or niche in a certain particular product proposition. So the better you align yourself with the strategy of the neobanks, you are able to go to the clients with a much better proposition. And at the end of the day, the neobank also needs a bank at the back end, because they are not a licensed entity. So they need the bank's trust element, or the bank's backbone, to also provide their proposition to the client. So in my view, it is a very synergistic partnership which needs to exist between neobanks and banks. And I think both of them can complement each other to make sure that banks are also able to leverage the value of neobanks, and neobanks are able to leverage the bank's customer base, and also the trust factor to expand their services with the customers. So it's a win-win.
I think you briefed it really well, Ajay, but I will take Riddhi, your perspective as well. How do you see this proposition, neobanks and banks?
No, I think again, I will tend to align with what Ajay said, because end of the day, I think Ajay mentioned it earlier as well. It's a matter of collaboration and coexistence, rather than one getting wiped out at the expense of the other. That's not going to happen. They are both these large entities are going to coexist. But having said that, I think what the traditional banks need to think is, what do neobanks really do well or do better than them? And if you look at it, there are three broad things. One is a greater operational efficiency. That is one. Second is a personalized and enriched customer experience. Again, keeping customers at the center. And third is new levels of capital clarity and agility, right? Digital technologies that will allow these banks to provide actionable insights. Ajay spoke about AI, ML, and all of these things. So these are broadly three things that neobanks do probably better. And that is also because in our own independent analysis, we realize that all these neobanks, they have started with a platform first approach rather than a product first approach. So that is what neobanks do better. And probably I am seeing a lot of traditional banks going a similar space. But at the same time, I completely echo what Ajay said to wrap it up, that it's going to be coexistence, not a competition where one is going to wipe out the other.
Right, Riddhi. Thanks for that summary, and thank you so much, Ajay, for sharing your perspective too. So I'm really glad to, and many thanks both of you, for joining on etbfsi.com and sharing your perspectives. Thank you so much, gentlemen.